Welcome back. Let's chat commodities, where one quarter is done and we have seen the gold prices stable, crude prices up and US dollar down, and that perhaps has been supportive for many of those commodities. But joining us now is Jodie Gunzberg of S&P Global to talk more about on what the new quarter could be doing as far as many of these asset classes are included. Jodie, hi, good to have you. I want to start with the gold prices, which were up nearly 2% in the previous quarter. How does this quarter look to you? Where will you see the fundamentals really forming?
Gold is only up slightly year to date, so performance alone isn't that exciting. What is far more interesting is how steady gold has remained around the volatility of the equity markets. Gold has stayed relatively positive while the stock market dropped, and did it with just about half the volatility of stocks. The correlation remained very low, which is consistent with history and makes gold a strong diversifier for stocks. That could be more important now than ever if this bull market ends.
Sure. You know, one thing that the gold and other asset classes take cues from is the US Fed rates. And would you say that 3 off total in this year has now been fully factored in?
Generally, rising rates are good for equities, especially if there is growth and inflation. Though since the most recent hike, India was basically flat and Europe lost about 1.5%, I think most markets had a muted reaction to the rate hikes since the Fed plans have been so well telegraphed. However, the US is down 4% and China lost more than 6%, but those losses are most likely due to the rising trade war tensions rather than the rate hike.
Jodie, if you look at the previous quarter, almost all the metals have closed in the negative. The first couple of months were good, but all of that turned around for the month of March. Where the metal prices are right now, would you say is a good buying opportunity?
The metals index is just reflecting the market performance rather than driving it per se, and there is very little correlation between the metals and major markets globally. However, an event like the trade war could slow both the demand for metals and economic growth simultaneously. That, in turn, could impact the global markets.
Jodie, comment on the crude oil prices also, because there is a very different view on the street. We have reports suggesting $50 this year, then there is $80 being talked about as well. And then, of course, there are inflation concerns too. Where do you see the crude prices headed, and how would you look at the rest of the scenario?
Based on the index history, even if oil were to rise to $80, the gain wouldn't be unprecedented. Since energy is the most volatile component of inflation, rising oil is likely to accelerate inflationary pressures. However, due to the storage costs and futures trading, the oil itself doesn't always provide a good return through inflationary periods. So investing in energy stocks for inflation protection can be a better choice, especially for the less hedged, smaller stocks.
All right, that point is well taken. Jodie, one more question. And when you look at this quarter now, what sector are you willing to bet on the most? Is it going to be metals? A lot of people have been talking about gold. Or is it going to be equities back on your radar?
I would describe the first quarter as a mixed bag, characterized by a pickup in equity volatility. Gold held steady, oil rose, and the dollar fell. It was the perfect quarter for either broadly diversifying or taking a single position based on a view. Now, if the S&P 500 is negative at the close, this quarter will be most remembered as the quarter that ended the 9-positive quarter streak, the 5th longest streak in history since 1936, tied with the one ending in March 2015.
All right, Jodie, we'll let you go at that. Thank you so much for joining us. Well, that's the view coming in from S&P Global. Then they expect the precious metals in the commodity sector to do the best.
Okay, all right, Manisha, thanks so much for that. Well, keep an eye out on the markets. We're still down closer around 10 points odd, but the mid-cap index is doing well. We have quite a few of those metal stocks as well that have spiked up in the last 1 hour odd, and a couple of these other stocks like Century Textiles as well. That has moved virtually to the high point of the day at around 1,200 rupees per share as we speak. On that note, we'll wrap up on Halftime Report. You stay with us. Business Lunch comes up next.